How do you see today shaping up? What's your Wex word of the day?
My Wex word of the day is bifurcated, Frank. Over the last few months, my personal view has become bifurcated in what I think will play out in the short term versus the long term. In the short term, I've had to at least temper some of my bearish posture just because the catalyst that I thought would be catalyst did not play out that way in the market, even though the fundamentals I was anticipating occurred. Long term, I remain bearish, and we'll get into the reasons why, I'm sure. But also the market is bifurcated. And so we're seeing tech take leadership as like a trading day yesterday. I expect that to continue. And as we enter the full economic cycle, Frank, I think that investors will start to concentrate on those companies that are going to put up 20% earnings growth, even as the environment becomes a lot more hazardous versus the rest of companies that'll put up low single-digit earnings growth throughout the year.
"Quote unquote" hazardous environment that you're seeing. I'm gonna throw one over the plate for you right now. When we look at the tech trade, are you worried that it's becoming a bubble? We just highlighted a SocGen note earlier today saying, you know, the S&P, the upside case, it could go to over 6,600, but the downside case is if this is a bubble, it could drop down in the 4,000s.
Look, and you know that my target for a long time was at that area. I'm having to rethink that, Frank, and the reason is that tech makes up so much of what the S&P is now. The top three stocks, Apple, Microsoft, and NVIDIA, make up 20% of the S&P at this point. And so I think that the capitulation that would need to occur in the AI market, in the cloud market, I have a hard time foreseeing that, when my view is that these are the companies that are going to continue to put up 20% earnings growth, even as the macro environment becomes more hazardous.
What, not bearish on the tech trade? Greg, you're shocking us today. You're really shocking us. I want to get to something else.
For now.
I want to get to something else we hit on this show. Our CFO Global Survey, 38% of our global CFOs, they believe we're going to get our first rate cut in September, and then a large number of them believe we're going to get one in November or December. Where are you at in that camp when it comes to rate cuts this year, and how important are they to the rally that we've seen so far?
It would be interesting to see if those same respondents were those who thought we were going to get it in March. I'm maintaining my view. Governor Bowman came out in second in my view and said that she publicly stated that she doesn't see any rate cuts in 2024, and she's a voting member. There was another voting member we saw in the May 1st notes that also indicated that they didn't foresee rate cuts, and the two combined also put hikes back on the table. If you had asked me in January, Frank, if we would not have 6 or 7 cuts and we'd have 0 cuts, and I think that's the scenario that plays out, and the markets would be here, I doubt that any normal investor would say that that's what they anticipated if we were going to get 0 rate cuts. But other things have powered us through.
All right, speaking of the things that power us through, it's been the AI trade that's really powered us through right now. Your pick for us today is Oracle, kind of seen as a lower valuation AI play, I should say. Shares are up double digits since earnings. Why get in now after we've already seen that big pop post-earnings?
Right, and so the question becomes, has it been propelled as much as it should be? And I think when you look relative to the other AI names, you can make an argument that it hasn't. You know, they're still supply constrained in that very lucrative cloud AI market. They put up a 42% revenue growth in infrastructure cloud services. And so when we widened exposure on December, Frank, and you and I had this conversation, we were looking for names that, you know, in addition to the pillars, right, of the NVIDIAs and the Googles and the Microsofts of the world, we advocated looking at things like cybersecurity and like Oracle that haven't participated relative to those pillar names.